Oljan backar på bred front och marknaden är jublande glad över en fredsuppgörelse. Det här är EFN Råvaror. Det är den 15 juni. Varmt välkommen. Vi noterar VTI och Brent som båda sjunker med omkring 5%. Vi ska snacka om det, men den här gången på engelska. And we say a warm welcome to Frank Walbaum, senior trader of many things, commodities and currencies alike, tied to the German broker firm Naga. Always nice to have you with us, Frank. What are your thoughts on market movements more broadly today? This is quite a glad day in many asset classes.
We see a nice risk on sentiment and a nice risk on development, right? And I believe that story is just started potentially. I mean, how many times Donald Trump stated that there's peace agreements? I don't know, 30 times, 100 times, quadruple million times, whatever. I think it's the 40th time now, but I think agreements are seemingly starting to be in place. That should lift the risk sentiment. And now we go. The big ship is leaving the port through the Strait of Hormuz.
Very good. What's your take on the risk of some kind of attack or violence or a mine incident wreaking havoc to this newfound happiness?
Could be the case, but look, we've had quite a few of these instances fairly recently, right? The attack on helicopters, drone attacks, US bases, whatever. But these didn't really kind of mess up the broader scale environment. So I believe still that it's going to last as well. The markets are a bit of fatigued with all that Strait of Hormuz story. And I think now we are on a good way at the moment. And the risk sentiment, as I said, is kind of getting higher. It's positively impacted. We see the dollar, which is driving things, is losing momentum. And I believe that we are on a good way at the moment.
When we talked about this show last week, you told me you were short oil. Congratulations to that position. Could you tell me a little bit about why you were negative towards oil, and are you still, if we look forward today?
Well, as a trader, you sometimes also got to make some profits and land some good trades, right? And that was based on a technical candlestick pattern. 2 weeks back, we saw the markets moving up within the week, and towards Friday, the market started to kind of wear out and move lower. This was actually purely a technical analysis from our side, and we believe the market is moving lower. That said, I stated beforehand, I think the markets are just like having priced in already the war with Iran, Lebanon, Israel, whoever is just involved there, right? But the market, from a technical point of view, point me that we've gone high towards the whatever 120, 130 US dollar levels for a barrel WTI, and from that point on, I was short, and we remain in our short positions because I think medium term the market looks good. We see it on your chart now. We've broken the 90 US dollar support level. We are now kind of eyeing the 50 moving average, which is what we pay attention to as well. And that said, we don't want to trade oil purely on the technical level, but the fundamentals are with us. And if a peace deal is seemingly kind of getting on here, then we see the markets moving lower. That said, we remain in our short position. I'll see as a target the early 70, 69 US dollar area. And until then, we just gradually ease out of this position.
Quite interesting. So this technical setup, does it trump concerns about an inventory rebuild? Many guests on this show in past weeks have said even if we get a halt to the active part of the conflict, there's going to be a big inventory buildup and a big reconstruction phase in the Middle East that will keep prices up for some time. Any thoughts on that kind of thoughts compared to the technical background you just described?
Yeah, could be the case. I mean, obviously, it will still take some time, a couple of months at least, right? So I might say just takes another, say, rough 3/4 of a year until everything is being built up, right? So from the production as well, the refineries and whatnot, and obviously the transport way through the Strait of Hormuz is one impasse we currently face. But I don't think that the inventories at the moment are really kind of driving the market. It's more like the fear which is like, what if the conflict escalates? And that's what we see at the moment. It's just a risk on, full steam ahead. And I remain positive for overall markets, including the weakness of the dollar. But I would say oil has kind of gotten, with all these shocks, and look, we've seen this in the past, right? So the market went always up and then kind of really with any shocks in the past. And then it gradually started to come down. That doesn't mean that we are not in the short run, maybe really retest the 85 or 87 US dollar level. But for now, I think any price increases, I would start to short again.
Lastly, a philosophical question. Maybe we learned something about the world and the flows of oil, and maybe the world will start to work towards being less dependent on the Hormuz Strait, and maybe we'll see much lower oil prices in a longer perspective. It's a bit philosophical. I don't know if it's a tradable thought. Your take on it?
But didn't we talk about the same thing when we had COVID, right? So the pandemic, governments shut everything. We said, look, we're going back towards producing stuff locally, right? So, but did it happen in the end? Not at all. We are more connected than ever before. I mean, SpaceX now, huge IPO happening, right? So the world is kind of moving on that topic. And I don't see that this is going to be the case, because the oil productions and the oil production facilities have long kind of been at similar places. And I don't think now that this entire story will be changing, you know. And I believe we are kind of getting a bit oil redundant, medium to long term, say the next 20 to 30, 40 years, going electric with transport and vehicles and stuff. But I believe that still the main players and the global trading and shipping routes are still going to cause issues if any conflicts will flare up again. Yeah.
Quite interesting. Let's change commodity. I want to talk about gold. We're going to talk about gold in Swedish just for a little bit, so bear with us. Men, vi pratade om guld och inte minst silver tillsammans med Erik Strand i Börslunch häromdagen. Så här lät hans syn på den senare råvaran.
Silver har gått upp 110% på 1,5 år, så det är en väldigt stor uppgång. Samtidigt är det en klar nedgång här, minus kanske 12% här i år på grafen. Och ännu mer från toppen där det spikar upp riktigt högt. Så det är stora rörelser i silvermarknaden. Samtidigt så ser den väldigt, väldigt bra ut, och den ser väldigt, väldigt bra ut för bolagen som utvinner silver, eftersom vi är på så mycket högre nivåer än vi var när vi var på 2030.
This was a Swedish fund manager, long silver and gold, and a lot of miners as well. I just wanted to ask you, do you have any thoughts on gold, which has seen a little bit of a comeback today, I believe, after a rough couple of months, excuse me?
Yes, the market has been nicely moving higher again. And again, it's impacted by the dollar weakness, purely a technical US dollar trade. We got your chart there. And the market is moving towards higher levels nicely at the moment. The next strong technical resistance area kicks in at 4,400 US dollars. Until then, I would prepare for the market to move a bit higher, maybe even overshooting towards 4,500, 4,495 or something. Until then, I might say, or when actually at that point the technical resistance kicks in. If the market starts to then weaken again, we could start and be prepared for shorting opportunities. However, looking medium term, we got the weekly chart. We are bouncing off nicely off this 50 moving average. And now back to your Gabriel previous question. If any conflict is gonna come back and follow up again, right? We might see as well that the safe haven status in gold will resume momentum as well, and the market will then start to push back higher. So technicals points towards price rises for now. If technical resistance then fails to break, we could see the market coming lower. But if we see the geopolitical tensions kind of to play the fun part, let's negatively say that, we can see the market also moving higher, because naturally we see the distrust in the fiat currencies, and we see gold, silver as well, which is still the nice brother of gold, I might say. We still see that the market is eventually long-term moving higher. Inflationary story, devaluation of fiat currencies, predominantly the US dollar. I see the market in the next 5 years for sure at higher levels.
After the 7-1 win towards playing Curacao, do you have any prediction for the Mannschafts gold aspirations?
Whoa, that's a good one as well. So silver is not enough for Germany, as you know. We got a cool coach or manager, as we might say. I think we have some good players in our team. I mean, you got the big Viking as well in your team, so we have to see what really goes. But yeah, let's see.
Let's hope. You mentioned the US dollars when we talked about gold. Should be coming down nicely in a risk-on environment, or what's the trajectory here? Sorry about that.
You mean with the gold market?
No, the US dollar. I know you trade currencies as well.
Yeah, Yeah, exactly. Sorry. Yes. So the dollar index shows me the market is weakening again, and we got this important FOMC meeting on Wednesday with the Federal Reserve, Kevin Walsh deciding is he going to leave rates unchanged, which I think is what the markets believe in general. Towards last week, I might have said, look, let's see if Kevin Walsh might start to implement rate increases. Actually, another rate hike could have been probable, given that CPI prices were not overly kind of coming lower, given the fact that the labor market, on paper at least in the US, is like rock solid. But for now, with the war situation easing, I might say he remains on hold for now, and say quarter 3, 4, we could see potentially rate cuts in the US as well. I mean, the European Central Bank hiked rates, but they came from a lower level as well in terms of interest rates. And the US, I believe, they might kind of obviously leave rates unchanged, and that if they do and hint it's like a dovish outlook, we might see as well that basically the US dollar is going to lose some momentum. And weakening US dollar, Gabriel, I'll tell you, I mean, the stock markets will likely move higher. I don't want to believe it because I start to play some short positions against my entire portfolio in the equity market, but I think there is quite some room. There's quite some room for the downside, yes.
Another optimistic market, and I want to finish up with this, is in crypto. Bitcoin has had a rough patch, but reclaimed the $65,000 level over the weekend. This is, of course, after a big correction down from 80,000. Any thoughts on Bitcoin or crypto more broadly?
Well, kind of my crypto portfolio is deep down in the bushes, I have to say.
As is mine.
60% down in most of my tokens. But again, I have to admit it, right? So like I was the firm believer that the altcoin rally would really come last year, but I got punished on the wrong foot. In any case, I remain in. I've no Bitcoin. I own some Ethereum. I got some XRP, Ripple, and Cardano, and I'm prepared to start buying into those positions as well. Bitcoin, in particular, is currently at a very strong technical support level. And again, pay some attention towards the 50 moving average. In the past, it often told us that we were not far off from a bottoming in the markets. That's $66,000 roughly. At the moment, if that support level holds, and if the recent high points are being broken, I think the markets can move higher. Though if we see another leg lower, then we might see just a bit of a more selling wave. I think towards the end of this year, that's like a horizontal time span period, right? So bear market starting to kind of phase out, and that's where we would be able to buy into position. So long story in Bitcoin, yeah, I would start to accumulate some at the moment, but wait a little bit kind of to get into bigger positions. But we need to see a break of resistance levels, and I want to see some higher price points, like a higher low, and to just buy into it.
Frank Walbaum, always a pleasure to have you on. We talked about a lot from oil over gold, US dollars, and crypto. Enjoy your summer. Good luck in the World Cup, of course, and I'll hope to see you again soon. Till er som tittat så tackar EFN Råvaror. Vi tackar för oss för den här säsongen. Det här är vår sista veckovisa sändning under den här sommaren. Men vi är tillbaka igen i augusti förstås, och råvaror kommer alltid tillbaka när det bränner till någonstans. Lycka till där ute, så ses vi snart igen.
Det här var en produktion från EFN. Ansvarig utgivare Anders Hägerstrand.